All right, here we are with the Smart Beach Investor podcast. I am John Moran, CEO of Smart Beach Investor and Keller Williams Realty's At the Beach team. As always, I'm here with Katie Luce.
Hi, John.
Our Director of Operations and all-around great person.
Absolutely.
Oh my, did I just say all that? Don't get too crazy. All right, so we're going to talk about what's going on in the market here in just a minute. And then we have a great guest today, Sue Botello with Waterstone Mortgage. She's going to be talking about money, and how to get it and where it's going and what's going on.
Give me the money.
Show me the money, right? Isn't that the line? So we're going to talk to her. But before we do that, Katie, let's talk about what's going on in the real estate market over the last week here in town. Here's what we're seeing. I pulled the numbers this morning. It continues. Inventory, the number of condos is down year over year for March, down 12.4% for condos. Houses down 18.2%. There's not as many properties to buy, which is interesting. That means there's not much to buy.
Yep.
And buyers are in trouble, right? When it comes to that. And then I'm also looking at new listings coming on. New condo listings down 14.4%. And houses down 19.7%. There's just not anything.
There's nothing.
Well, we shouldn't say nothing. There's just not as much to buy.
Yeah.
Okay. And the flip side of that is pricing. Let's look at pricing. Condos, average or median price for condos last month up 37% year over year for March.
Wow.
That's a ton.
Yeah.
That's a ton. Houses up, 18.8%. They're more expensive.
Yep.
Okay. Then we looked at median list prices. What are the people trying to sell for right now? Condos up 46.9%.
Up.
Oh my word. Houses up 56.4%.
56.
Oh my word, right?
Wow.
So the number of sales is down, but prices are up.
Yeah.
And that's going to get into an affordability thing, isn't it?
Yeah, it's going to get interesting.
We're talking a lot about affordability, the ability for buyers to pay for stuff. So let's look at it. We have inflation. Washington Post is reporting that prices rose 8.5% in March compared to last year. That means everything is 8.5% more expensive.
Higher, yeah.
Gas, food, rental prices here at the beach, everything, okay? It's the largest annual increase since December 1981.
1981?
Were you alive?
No, I wasn't.
Oh, my word. Well.
Push it up to 85, though.
Okay. Just think what it was in 85.
Yeah.
But it's up. It's up a lot. Mortgage rates. We're going to talk to Sue in just a minute. Mortgage rates, 30-year fixed mortgage rates surged to 4.95% this week, up from 4.73 last week, according to Bankrate. Okay. Highest level since 2018.
Wow.
It's costing more.
Yep.
Right?
Cost of living.
The prices of the properties are going up. The money to buy the properties are going up. The gas to get to the properties is going up. The rent to rent the property is going up.
Yep.
That's an affordability issue.
Yeah.
And when things get too expensive, buyers either can't afford to buy or they simply choose not to buy.
Yeah. They clam up.
Yeah. We're not there yet because we're seeing these prices go up, but there are storm clouds on the horizon.
Yep.
Okay?
Winds are blowing.
The winds are definitely blowing. And I'm sure Sue can talk to this when we talk to her, is the Fed's probably almost certainly going to do increases again. I think I saw 0.5 point maybe in May.
May, you said, and then again in June?
Then again in June is what they're saying. And then I read something interesting from Skylar Olson, who's the principal economist at a real estate technology firm called Tomo. He said there are two sides to raising these rates, right? The monthly affordability will take a hit, like we were talking about, right? But we'll also shake off some of the more investor types that are looking to get into here because the numbers don't work anymore for them.
Yeah, that's what we've been talking about. At some point, like you said, the numbers don't work. It's not pushing off enough.
Yep. And it's these investors that are jumping in that have caused these rates to jump up or these prices to jump up quite a bit. Not necessarily the rates, but the prices. So that'll change. The other thing is COVID. Philadelphia just announced
still going on.
They're going for indoor masking throughout the city of Philadelphia. I think Shanghai, China locked down. You know, if that turns and there's some issues here in the United States, that will impact travel and abilities to travel.
And rentals.
Don't know if that's going to happen or not, but all those things are going to come into play. And all of that is going to impact sellers' ability to sell at these high prices.
Because of the rental income.
Because rentals are up, cost to buy is up, the money to borrow is up, everything's up.
Mm-hmm.
And when everything up, affordability goes down. And prices have to follow affordability, or else we're just going to get stuck.
Yeah.
Okay. So look for that to come here in the next, I don't know, probably the fourth quarter, first quarter next year. I think it's going to be very hard for folks to hold on these high prices. But we shall see. And I'm sure Sue will be able to talk to that. But what do you do if you're an owner?
Well, if you're going to hold it for 5 years or more, hang tight, buckle up, right?
That's right. Right.
But
if you're going to hold 5 years or longer, you're a long-term player in this, who cares?
Yep.
The market will do whatever it does. You sit back and watch. But if you're thinking about selling,
sell now.
Sell, sell, sell. Mitigate that risk. Sell now when we know buyers are in the market. We know they can get relatively cheap money. We know what's going on. Do not wait